What if I told you that right now, you could own 100 ounces of silver on paper, but if you tried to take physical delivery, it wouldn't exist? Sounds crazy, right? But this is exactly what's happening in the silver market, and most people have no idea. Banks are trading silver they don't have. Governments are looking the other way. And somewhere in the middle of all this, the world is running out of actual physical silver. Welcome to the Silent Ledger, where we expose the financial truths they don't want you to know. I'm about to show you the biggest manipulation scheme in the precious metals market, and why it might be about to explode. But before we dive in, make sure you hit that like button and subscribe, because what you're about to learn could change how you see the entire financial system. Let's start with a simple question. How much silver exists in the world? Not on paper, not in digital contracts, but actual physical silver that you can hold in your hands. The answer might shock you. According to the Silver Institute, global silver reserves are estimated at around 1 billion ounces. That sounds like a lot until you realize that the paper silver market trades more than that amount every single week. Think about that for a second. In just 5 trading days, more silver is bought and sold on paper than physically exists in reserves worldwide. This isn't a free market. This is an illusion. Here's how it works. When you buy silver through most investment platforms, you're not actually buying silver, you're buying a contract that says you own silver. These are called derivatives or paper silver. Banks and financial institutions trade these contracts back and forth. And here's the kicker, they can sell the same ounce of silver to multiple people at the same time. It's called fractional reserve trading, and it's completely legal. Imagine if 10 people bought tickets to the same airplane seat. That's essentially what's happening in the silver market right now. Now you might be thinking, okay, but why does this matter? Well, it matters because there's a huge difference between paper silver and physical silver, especially when demand starts to spike. And right now, demand is absolutely exploding. Silver isn't just used for jewelry or investment. It's critical for modern technology. Solar panels, electric vehicles, smartphones, computers, medical equipment, all of these require silver. In fact, over half of all silver mined today goes into industrial applications. And as the world pushes toward green energy and electric cars, that demand is only going up. Here's where things get really interesting. Global silver production has been relatively flat for years. We're mining about the same amount of silver today as we were a decade ago, but demand has skyrocketed. According to recent reports, the silver market has been in a physical deficit for the past 3 years. That means more silver is being consumed than is being produced. So where's the extra silver coming from? It's coming from above ground stockpiles, and those stockpiles are running out fast. The US used to have billions of ounces of silver in strategic reserves. Today, that number is close to zero. Governments sold off most of their silver decades ago, thinking it wasn't valuable anymore. But now, with industrial demand soaring and investment demand rising, there's simply not enough physical silver to go around. And this is where the manipulation comes in. Major banks and financial institutions have a vested interest in keeping silver prices low. Why? Because they've sold massive amounts of paper silver that they don't actually have. If the price of silver suddenly spikes and people start demanding physical delivery, these banks would be in serious trouble. They'd have to go into the market and buy real silver at much higher prices to fulfill their obligations. So what do? They manipulate the market. This isn't conspiracy theory. Banks have been fined multiple times for manipulating precious metal markets. In 2015, several major banks were caught rigging the silver market and had to pay hundreds of millions in fines. But here's the thing, the fines were just a slap on the wrist compared to the profits they made. And the manipulation didn't stop, it just became more sophisticated. Here's how they do it. When silver prices start to rise, these institutions flood the market with sell orders for paper silver. This creates artificial supply and pushes prices back down, even though there's a physical shortage. It's like someone yelling fire in a crowded theater when there's no fire, just to create panic and get people to sell their tickets cheap. And it works, at least for now. But there's a problem. As more people wake up to this game, they're demanding physical silver instead of paper. And when enough people do that, the whole system could collapse. We've already seen glimpses of this. In early 2021, a group of retail investors on Reddit started buying physical silver to expose the manipulation. The movement was called the Silver Squeeze, and it caused temporary shortages at dealers around the world. Premiums on physical silver coins and bars skyrocketed because there simply wasn't enough supply to meet demand. Now imagine what happens when not just retail investors, but countries, institutions, and major industries start demanding physical delivery. The entire paper-silver market could unravel. This is what some analysts are calling the everything shortage. It's not just silver. We're seeing shortages in copper, lithium, nickel, all the metals needed for the green energy transition. But silver is unique because of how manipulated its market has been for so long. So what does this mean for you? Well, if you're holding paper silver, you might want to reconsider. When the music stops and there aren't enough chairs, a lot of people are going to realize they don't actually own what they thought they owned. Physical silver, on the other hand, is something you can hold. It's tangible. It's real. And as supplies tighten and demand grows, its value is only going to increase. Some experts believe we're heading toward a silver price explosion unlike anything we've seen in decades. When the disconnect between paper and physical becomes too large, the market will have to correct. And that correction could be violent. We could see silver prices double, triple, or even more in a very short period of time. Not because of speculation, but because of fundamental supply and demand. The signs are already there. Mining companies are struggling to find new deposits. Recycling can only provide so much. And every year, billions of ounces of silver are consumed in products that never get recycled. It's used in tiny amounts in electronics and then thrown away forever. This is called the silver drain, and it's irreversible. At the Silent Ledger, we believe in following the facts, not the hype. And the facts are clear. There's a massive disconnect between the paper-silver market and the physical reality. Governments and banks have kicked the can down the road for years, but we're reaching a point where the can can't be kicked anymore. The question isn't if this system will break, it's when. So here's what I want you to do. Drop a comment below and tell me, do you own physical silver or are you in the paper market? What do you think is going to happen when a shortage really hits? And if you found this video valuable, please share it with someone who needs to hear this truth. The more people who understand what's happening, the harder it becomes for this manipulation to continue. Don't forget to subscribe and turn on notifications because we're going to keep exposing these hidden financial realities. The Silent Ledger is here to shine a light where others won't. Thanks for watching, and I'll see you in the next one.